Hey Tom, hey Johns, how are you guys? Can't hear you. 1 second. Ooh, a bit loud, bit loud, bit loud. Music's loud, Johns. I think it's your background noise, Johns. Do you hear that song?
Hi. No, I did hear it. I don't hear it now. I hear it now.
Insane music, like they can hear us, bro. Okay, press it live, but I can hear music. It's very loud. Still very loud. Getting louder. If we press live, then you can just turn the music off, right? Music's gone. Perfect. Let's go live. Sound good?
I can't see your picture, Adam.
Johns, can you see mine? What can you see, Tom?
I just see the Cryptonary we're going live, but
Okay.
I don't. Maybe,
Yeah, I think when he turns it off, we should see both of us. Cool, Johns, you can go live.
okay.
Okay. When I see us live on X. How's it going, Tom? How are you?
Yes, good, mate. You? Yes, got you.
Yeah, I'm doing good. Look, you came back just in time. The weather's fantastic.
Yeah, it's good. Yeah.
How are you finding your time back in your old stomping ground?
Yeah, it's all right, to be fair. It's very lucky that the weather's good. But like even my face, I feel like my face is getting more like I'm not used to the cold weather anymore and stuff, I suppose. But no, it's I'm joking, obviously, but it's all right. It's good to be back for a little bit, but I would like to get back to Dubai now, to be honest.
What's your expectation? Do you think you're going to get back anytime soon? A lot of it depends on, what's happening in the Strait as well, right? Because that's a good
Yeah,
kind of notifier of how the region looks.
yeah, I don't know. I want to go back in the next couple of weeks, but it doesn't. I mean, I can go back, but it doesn't look like phenomenally likely. I think sometime in early April will be fine. Um, I think it'll be okay then. But yeah, just need to see basically. But at the moment, I'm just sort of living out of a hotel and staying here and living out this hotel for now. But I'd like to think in 3 weeks' time I won't be. So yeah, fingers crossed.
Interesting. Let's hope so. So that's actually an interesting timeline too. So 3 weeks from now, if your expectation is to be headed back to Dubai, I assume you believe tensions would have calmed to an extent. And what does that look like for the markets?
I think. I mean, I'm going off somewhat. I'm going off somewhat what Trump is saying because he's saying, several weeks more. So uh, you then like think that this will be at least talk of a ceasefire, even if there isn't a ceasefire. Talk of a ceasefire might be on at that point. The Americans and Israelis are doing like phenomenal damage to in Iran, but the Iranians are doing a lot of economic damage. With the price of oil, and it doesn't cost them anything really. It doesn't cost them a lot. They only have to, and this is what we've been saying for a few weeks now, is that to use that weapon of higher oil prices to get Trump to eventually pull back. Um, they only have to fly a few drones into a few ships each day at most. That's all they really need to do. It might just be the case they do that twice a week, and ships are just not willing to pass through because of that. So really, it's phenomenally cost effective, a cost effective weapon for them to keep doing that. If I was, I think the Iranians will win because I just think they will. They're just taking massive amounts of damage. But I just think the IRGC will keep replacing leaders, and they'll just keep pressuring oil prices higher and higher. And I think that's what Trump will then have to peel back because of that. I'd be surprised if this is still ongoing by the end of April. But I think this is inflationary in the short term. I think this is recessionary in the medium term. So I'm writing up tomorrow's market update already. Like I've done all my notes and all this kind of stuff. I'm writing up, and so what's happened here is after Powell's press conference yesterday as well. So it's all intertwined. But they basically said, look, a energy shock, a supply side energy shock should be looked through, and you should be it should just be looked through. You know, he's never going to say transitory again, but he's basically saying it should be transitory. And he also said that the dot plot and economic projections, if this was a meeting where they didn't have to give that, they would have chose that meeting to not have to give that, which basically means you can throw the dot plot out the window. And even though they've still booked in one cut for 26, one cut for 2027, he's basically saying don't pay too much attention to that. So I think with that being the case, if you do have this inflationary sort of shock in the immediate term, short term, and due to oil prices going much higher, that's going to keep the Fed on hold for longer. It's going to bring consumer spending down significantly, and it's going to be recessionary. So I think you're at this real interesting sort of pivotal point for like the risk asset indexes, Nasdaq, S&P, etc. I think they're rolling. We've been saying for weeks that they're rolling over, and they are now rolling over. I don't think you get any cuts in the meantime, but I still think so. Sorry, the market is pricing the rates to 80% likely to stay on hold this year, with like an 11% chance of a cut and a 7% chance of a hike. So even I don't think you get hikes like at all. But so basically that's telling you what this higher oil prices are going to be, is they're going to be longer lasting than short term, which is what the market was looking at, thinking this was going to be a short term effect, so temporary effects, blah blah blah. But now we're a week or two on, I think the market is starting to realize that maybe that's actually not the case. So I think short term impulse is going to be inflationary. It's going to be recessionary 6 months out, 9 months out, and I think that brings the Fed to cutting more significantly. So higher for longer for now, or staying flat for now for longer, followed by several cuts. So I wasn't even sure if I was going to throw this in the market update. I have it as a point for tomorrow, that I'm not sure if I'm going to throw in or not. But again, this is just me like spitting out my thoughts. At the moment, Polymarket has the price of 2 rate cuts this year at only like 18%, I think it was. I mean, it's changing, it's chopping and changing, but it was 23% yesterday. After Powell's comments, it's now only like 18%. I actually think that's quite a good bet for the end of this year, and I think you still get sort of several cuts, and then they cut this year and they cut again next year, if not another 2 cuts next year. So towards the back end of this year, going into mid next year, I think there's a period for cutting rates by 4 cuts in that period of time, just because of the negative growth economic impacts that this energy shock is going to cause.
That makes sense. Very interesting. What would you say are the fair odds of 2 cuts a year this year?
I think 18% is lowish. It depends. It depends if the inflation sort of seeps into inflation expectations, which at the minute it's not. Otherwise, that would cause the Fed to hike. But inflation expectations are still muted, so that's fine. Again, it all depends on how this goes on for. But the longer this continues going on for, the more the market's going to get more and more jittery. So I just think the outlook, cash is the position now. Like cash really is, not gold. You know, just nothing for now. Just in cash. Use your cash for trade opportunities if you're that way inclined. If you're not, don't bother. But I would say cash is the position now. Polymarket has it at 18% now. I'd say it's like maybe 25-30% chance that it will happen. It might be the case it's 3 cuts or it's just 1 cut. But I think if you said to me, so 1 cut is currently on priced by the market at like 7% on the CME, but I think it's 11% on the CME. But I think it's, you know, to at least get 1 cut this year, I think is drastically higher than that, like 30%, and the chance of getting 2 cuts are like 20-25%. But either way, I think the bias is still for cutting rather than hiking, and you're starting to see some pricing for hikes. I just think that's very, very, very unlikely.
Yeah, and that's simply tied to the expectation of inflation. If inflation increases, you can't cut / potentially you have to hike. And if inflation worries are overblown, then we may get more cuts in the market assumes is going to happen. And the number one thing influencing inflation right now is this war, in particular, the price of oil, the strain. That makes a lot of sense. You must be quite confident that tensions will calm down to expect multiple cuts in this year.
Yeah, I think both sides are going hard, and I think both sides are getting a battering, just being battered in different ways. One side is being battered by, you know, missiles actually landing on them, and then the other side is being battered economically in terms of the price of oil. Like the US is being battered economically in terms, not the US itself, but Trump himself in terms of his administration, the potential to get the Republicans to win in the midterms. So I think both will be looking for an off ramp in the coming weeks. It's weird at the moment because both sides are still quite far apart, but I think just it will be enough damage that if any, you know, the Iranians have put up with a lot already, so I don't see why they can't just keep putting up with this, as mad as it sounds, because they don't mind like dying for the cause, being martyrs and dying for the cause, and then someone else just takes over for them if they die. So they could just, you know, sort of continue to keep the Strait of Hormuz closed, price of oil keep going higher, and that is the pressure that gets Trump to pull back. I don't see this being multi-month, like falling into June, July. But could this fall into April? Yes. Could it fall into May? I think probably not. So I think this has got like a few weeks left, not several months.
Yeah, that makes sense. You said at the start you see Iran winning this escalation in a sense. Now, this is not military on both sides. It's firepower from the Americans. It's economic from the Iranians. You touched on a key point there. They have already taken a pounding, and there's no reason why they couldn't just continue to have this, especially because they have a very bottom up type of leadership in a sense. There's always someone else to take the place. Whereas, you know, if you got rid of Trump, it would throw the US off quite a lot. If you got rid of like a big CEO of a Fortune 500 company, it would whack things up. So, like you said, there's no real reason for the Iranians to calm things down. The US seems to be under quite a bit of pressure. What would prompt Trump to say, you know what, we've won this war, we're out, we're leaving it to you guys now, and to back off? And if he was to try and do that, would he be able to, or will he be pressured by Iran? Would they even consider opening up the strait regardless of what Trump does? Or is it for them, you know what, we're just going to keep this enclosed? Because if they do that and Trump loses the midterms because oil's at 150 and inflation's popping off and they do have to hike rates, then you're in a position where the longer they can hold this down, the strait, they could really F America up. And I don't know how they get out of this unless Iran backs off out of choice, to be honest with you, more so than being forced to.
I think Trump, for the last, what is it, year and a half, 2 years, whatever it is, year and a half since Trump's been back in as president, he has been able to like tackle out of everything. You know, Trump always chickens out of whatever he puts on, he can sort of take off. This is the one I don't think he can, like, this is not solely up to him to undo anymore. And I think the Iranians, I think they're in the driving seat because it's so cost effective for them to like sort of utilize that weapon of higher oil prices against the Trump administration, that I think if Trump wanted to just pull out now, he could. But at the same time, there's just zero guarantee that the strait is going to remain closed. And if they might then sit there, the Iranians, and say, we're going to actually open the strait, but for who we decide to open it for, and then still target US vessels. They might be friendly to Chinese vessels, anything Iranian that's leaving, but they might charge the Saudis, for instance, to say, okay, you can, if you want to export your barrels, no problem, but we're going to now tax you. So there's then a fee to go through. So I think the Iranians are a little, as mad as it sounds, are a little bit in the driving seat here in terms of just the effects they can have on this. So I think Trump needs to really, really batter them. But he's battering them so much, or the US and Israelis are battering the Iranians in such a strong way that I don't even think they know who they're potentially going to negotiate with anymore in terms of who the individuals. I think it was that Ari Larijani who was still left, and he's dead. So the son is nowhere to be seen. There's rumors that he's not respected because he's gay in Iran, and that's not respected, or whatever, and that he's injured in a coma in Russia. So how much? Apparently, there's other sort of reports that the IRGC are just using him, as like a figurehead, even though he's not actually, he might be sort of in a coma in Russia. So I don't know. I think
it's interesting.
I think it's very tricky.
I think when I'm listening to you, I'm hearing two things. I'm hearing optimism for tensions calming down and markets, performing. But then I'm also hearing a lot of, pessimism towards the war. But we're saying these two things are tied. In one sense, we're saying, no, probably not hikes. If anything, maybe a few more cuts, and I'll be jumping on the plane back to Dubai in a couple of weeks and things will calm. But then at the same time, we're saying Iran is in the driver's seat and there's no reason for them to calm things down. Never mind, we're kind of assuming Trump has a choice in the matter. He could pull out, but why, if you were Iran, why would you stop the assault? This seems like the perfect opportunity to hold the Gulf states at ransom, to keep pressures high. I believe they're already allowing some Chinese and Russian ships through anyway.
Yeah.
So they've managed to get across. They managed to get this along anyway. They're kind of selective negotiations. I guess you could always argue, well, America can double down and start attacking Russian and Chinese ships, but I don't think that's going to happen. That would be very problematic. So I don't know.
Yeah.
Do you think you're perhaps being emotional when you say things might open up and the markets might risk back on later in the year, versus when you're being objective about the conflict? There's no real reason it should calm down, especially until midterms.
No, I definitely don't think it lasts as long as that. I think despite how effective the Iranians' weapon is of closing the strait, higher oil prices to smash the Trump administration, they're still taking an absolute battering themselves. So I think they'll want to see that alleviated at some point as well. It might be the case they negotiate for, there'll be something around the uranium, but I think they'll negotiate for less sanctions or reduced sanctions. I think this could this last into April? Sure. Could this last into May? I would be surprised if it lasted into May, and if it did last into May, I'd be phenomenally surprised if it then lasted into June. I think this is something that lasts another 3 to 12 weeks. I don't think this is something that lasts until September, October time. So I think the result of that is an inflationary shock. Not that it's much of a shock now, but a big move in inflation higher. I think that keeps the Fed on hold for longer, for the next 3, 4, 5, 6 months, probably 3 to 6 months, I'd say minimum. But then the effects of that would be really negative to growth. So I think that then brings the Fed to cutting. This is not 2022 when there was the last sort of energy shock where you had a much stronger labor market, etc. You are now seeing weakness in the labor market. There's an extreme lack of hiring, advertising for jobs. So I think if they are on the side of, I remember Walsh is coming in, so he's going to side with, this inflation shock is transitory, etc. We can look through this as long as it doesn't creep into inflation expectations, which at the minute it isn't. So again, if this lasts 4 or 5 months, then yes, it will go into inflation expectations. But I can't see this lasting 4 or 5 months. So then you have to say, okay, they're just higher for longer, but they're probably then going to cut late Q3, Q4 of this year. And when they do cut, they're going to need to cut aggressively, not just several times, but probably 3 to 5 times. So I then think if you get prices coming down in the next 1 to 4 months, you need to be a buyer there for the sort of spring impulse coming out the other side. And I think that'll be late summer onwards when we're like looking beyond this. We're seeing inflation, the inflation metrics having topped a little bit, and the Fed will then say no, but we're still on hold. We're still on hold. And as you start seeing inflation come down again, i.e., this sort of effect is passed through, that you then the market starts sort of getting wind. Okay, there's going to be cuts coming, and it's going to be 4 to 5 of these cuts from late Q3 all the way into Q2 of 2027. That's the side I'm on at the minute.
Yeah.
That's the side I feel like is most likely to happen. So yeah, that's how I'm playing it or thinking about it.
Yeah, that makes a lot of sense. And as you kind of mentioned that there too, ultimately, as bad as it sounds, the worse things get, the better for the markets long term, because you have a bigger bounce, right? What goes up must come down, and vice versa. And it's interesting. The stock market, gold, silver, etc., went so parabolic several months ago, and crypto underperformed and got battered. Where now we're almost seeing the opposite effect. Crypto is already down. So how much further can you go? Whereas with equities and some of these other assets, it's like you went so far, you had to come down. And I do think when momentum shifts, crypto has a long way to go. So I think that's very positive. For argument's sake, let's say you're right. Let's say this goes anywhere between 3 and 12 weeks. Let's say 12 weeks. Let's go worst case scenario in that sense. How high do we see oil climb? And as we get inflation prints, obviously they're lagging, right? But how high do we go for inflation, oil, etc.? How does that impact? Let's focus on crypto for now. We think Bitcoin goes lower. We've said we see relief rally, pullback, and that's why it's a trader's market. For investors, you've put that level between 50 and 60K. It seems like a no-brainer that we're going to get there eventually. And we can talk specific levels for other assets later. But talk to me about oil. How high do you think we go? And inflation, where are we at right now? And where are we expecting the next print to be, / where do we top out?
Okay. So I think Brent goes to 120, 130 minimum for oil. Brent crude, I think it gets to 120. It's already touched 120 a couple of times. I think it can get to that 120, 130 range. Yeah, so that's for that. Your other questions were about inflation print.
Because the next print is the first one that really factors in.
I don't think the first one is the one that we should fix on, but I think say May's print could easily be 3.4, 3.5%, and then all of a sudden you're well above the, they've not been at their mandated target of 2% for like 5 years now or something mental. So, or 6 years, I think. So I think don't get me wrong, they'll still look at, even though it goes drastically high. They were calling it transitory inflation when inflation spiked post-COVID in the summer of 2021, and we got a surprise print of like 5.1%, and they were calling that transitory. So don't stress about low threes, mid threes, as they can still get away with calling that transitory. So I think they'll still use they won't use that term, but they'll allude to the fact that they're viewing it as transitory. Unless it starts creeping into inflation expectations again, then that changes the game a little bit. In terms of prices coming down, I think the indexes, stock indexes, S&P, Nasdaq, etc., have more to come down, and they haven't really come down they've come down so far in quite a stable manner, in just a stair step lower. There's been no sort of panic or no real crash. And every time you've had the futures open down substantially, it's always been bought back up. So I think they have room still to come down, and it feels like to me it's about to get going. And these things always take longer than you think. We've been quite negative on the indexes for probably several months now, and they've done absolutely nothing, to be honest. Like they've been sideways since the start of Q4. Let me find it, because I had a good chart on the S&P. I think, yeah, since the beginning of Q4 2025, October the 1st, 2025, the price of the S&P was at 6,700. It's now at 6,570. So, you know, for 2 quarters now, you've sort of been range bound, and now you're tipping lower. I think for Bitcoin, I think low 60s should be bought, but I think, you know, dip in between 60, 63, you want to be dipping in, and then anything in the 50s, you really go for it. So I think that key level, if you're really waiting for it, just wait till you see between 50 and 60. But personally, between 60 and 63, I'll start my buys. But I will 50 to 60 is still the level. The production cost is at 60k. In bear markets, we've always spent, you know, a significant period of time, like several weeks, several months below that production cost, which is at 60k. So I don't see why we wouldn't get something like that again. So yeah, that's how I'm viewing it. I think especially now, you ask yourself what's attractive to hide out in. To be honest, there's not much other than the dollar. So if you hold USDT, sweet, you know, you're all right. But gold is coming down, because it had a bit of a generational run, or a huge run up. It's now consolidating it's going to consolidate between, I would say, even between the low mid 4,000s and 5,000, because rate cuts have been taken out now, so that's why that's down. So I think if you can then rebuy that in the low 4,000s, that's a good buy to then sell into 6,000 in 18 months' time. But yeah, I think the play is just to be patient, be sat in dollars, and be looking to buy, for us on our side, crypto, to be looking to buy Bitcoin between 50 and 63k whenever it gives. And rather than, I think where traders and investors sometimes go wrong is that they try to wait for what they think is the bottom wick and pile in at that point. Prices will usually come down, bottom out, and form a bottom base, and then start moving up again, grinding up again. You don't want to be buying a bottom point. You want to be buying the bottom, i.e. strategically putting money in as price falls into the low 60s or it hits the 50s. You want to just be buying up a bit, and building position over that bottoming period, which I think we've already started. You know, Bitcoin was at 60k, so I think it's going to be 6 months, and that was February the 6th. So we're now, say, 5-6 weeks in it. It's going to take, I don't know, 25 weeks. We're a fifth of the way through that, or say it's even less, a quarter of the way through that. So there's still, I would say, a relatively long way to go in terms of buying those bottoms. But anything north of 70, I don't think you really want to be buying. I think if you start getting to low 60s, you can buy. And if you get the 50s, go for it.
That makes sense. In a single sentence, would this be accurate? The worse the war gets, the lower prices go, or no?
No, not necessarily.
Yeah.
I think you're just prolonging upside. I think you're prolonging upside. I think you're going to see rates be held for longer. But I don't think this is. I think the longer this goes on, people are saying that, you know, the longer this goes on, the more inflation we're going to see, and therefore the Fed should be hiking. I think that's wrong. I think the longer this goes on for, the Fed is just going to stay on hold for longer. But the longer this goes on for, the more likely it is to be recessionary on the other side of it. So then the longer this goes on for, the more cuts you're likely to get when the cuts do start coming. But again, they'll just be pushed out further. So I think, if I don't necessarily agree, it means the longer this goes on for, the lower prices go. I just think you buy that bottoming range, and I think you might have to be more patient. That's all. It might just take longer. That's all.
Yeah, that makes sense. I guess if someone's tuning in and they haven't been following us for a while, can you explain why you think we go into the 50s and 60s, and then off of that, where we see Sol and ETH in particular?
So just generally speaking, so the macro backdrop, I think the macro drives all of it. If you look at the correlations, macro is like the strongest driver. Liquidity and macro are the strongest drivers of price action for Bitcoin. The liquidity at the moment is not favorable. You're in a, you know, there's liquidity experts that we look at and we go to, and they're essentially suggesting to us that there's not ample enough liquidity in the system for risk assets to perform. You're seeing a flow of liquidity from the financial markets into the real economy, which is why the economy has been doing better. But financial markets have sort of flatlined for the last 6 months, you know, S&P, NASDAQ, etc. Bitcoin has sort of sniffed out this liquidity in mid Q4, and its prices have trended lower because of that. You're then going to look at, okay, so prices pull back significantly from all-time highs, and it's pulled back a big enough percentage where you say, okay, the majority of in bear markets, you have two ways, price pain and time pain. The price has pulled back significantly enough that you say, okay, the majority of the price pain has probably been had, but the time pain hasn't necessarily been had yet, which is why I think with that bottoming Bitcoin always usually has those bottoming processes, where you have those rounded bottoms and prices starts creeping up. So don't stress that you're going to miss the bottom. It's not necessarily the case. So then we ask ourselves, okay, if most of the price pain has been had, and we've had two massive capitulations. I think there was November 2025 and February 2026. We've had two big price drops, and those are the price capitulations. Then we move on to the time pain side of it, and we've sort of identified everything to be another 3 to 4 months. And then you have to look at key cost levels to say which ones are likely to be tagged in bear markets, which levels have we always gone to in those bear markets. Well, we've always spent time below the production cost, which is currently at 59.60k. We then very rarely spend time below the electrical cost, but sometimes you do get that. That's currently at 50k. So if you was to get, when people come out and say, oh, we're going to go to 35k or 40k, if we went to anywhere in the 30ks, just by looking at the mean reversion models, that would be a one-of-one event, i.e. we would be that suppressed to the downside that we would never have been that suppressed to the downside should Bitcoin visit the 30ks now. So I don't think we see 30ks or 40ks. But price has spent below 55k, that would be entering 5% of all days. So we've only been below 55k in terms of bear market cost basis and levels. We've only spent 5% of all days below that level, essentially, in terms of bear market. So if you was to get below 55k, you've got to go for it. I don't think we'll see below 50k ever again. And I think we sort of bottom in the mid to high 50s. Realized prices at 56. I don't see why we could not touch 56, but I'm not sure if we go below 50k, it'll be a wick to 48 or something like this. But okay, 45k, we won't see below 45k again. But essentially, there's a lot of key cost basis, on-chain cost basis levels between 50k and the low 60ks that would suggest that's where we'll likely bottom, and that those are the areas you want to be, or historically have been attractive to go and buy for long-term sales.
Okay, no, that makes a lot of sense. Now, let's look at it from the opposite perspective. What could invalidate all of that? So let's say the conflict clears up very, very quickly. Extreme scenario, Iran opens up the strait and they make some sort of deal where they can continue enriching uranium. Kevin Walsh comes in and inflation's not bad. And he, for whatever reason, bang, tries to cut rates to some degree. So liquidity increases. Do we see a spin? Does the market start performing? Is there any way essentially that we don't go down? And what are we keeping an eye on for that? Even if it's 1%, some trying to understand what would push us up where we see 85 before 55, for example.
Yeah, so it is possible for sure. I mean, I don't have it at high odds whatsoever, but it's possible. Again, that would be a change in the picture. So we're looking at everything and looking at everything to work out what's likely to happen at this moment in time. If we was to see something like that, you would go and get a couple of rate cuts, but it's probably not sufficient. And it'd be one in late 2026, and then another one in early to mid 2027. So would that be sufficient enough for Bitcoin to then go and have a major rally to 85k? That's possible, but to 100k, probably not. That's probably not going to be enough fuel or enough of a catalyst to go and drive it to 100k. That would be a change in the picture, but again, we're nowhere near that. So I think you have to maintain the bearish bias. Overall, the liquidity picture is still bearish for risk assets, and we're at sort of the point in the cycle where we're probably moving into a bottoming process. If you was to see a move up to 85, 90K, say, it'd be a little bit of a V-shaped recovery. So you would need to see a significant increase in liquidity into markets. And again, that's not something we're seeing right now. So if we were to see that, then I'm more than happy to change based on the data that we're seeing, the new picture that's laid out before us. But at this moment in time, we're just not seeing that. We're not seeing a supportive backdrop for risk assets. So there's several parts that would need to change, i.e. a clearing up of the conflict, the labour market to start weakening, but not weakening so much that the Fed can cut consecutively, but not because they're cutting for recession reasons, but because they're cutting because they're trying to get ahead of a weakening labour market and inflation is lower because of that. None of that is likely to be the case at this moment in time. They're going to keep on hold because we've seen an inflationary impulse from higher oil prices in the coming weeks and months. So then if anything, that's going to be a negative for economic growth. That's going to be it's going to be negative for the job market, the labour market. So that's going to seep in. So we're going to probably start to see, I don't think this next labour market print will be anywhere near as weak as what we've just seen. But again, I think we're seeing the downtrending of the labour market print. So that's what the picture is. And people ask me, well, what price would invalidate your thesis? Well, no price. I don't really work like that. It's based on what we're seeing as the whole picture to build the thesis out. And at the moment, you need a ton of things to change. And we're just not seeing that at this moment in time. Or do they even look likely? If anything, it's moving in the opposite direction of higher inflation for longer, hold rates for longer. But again, so that should bring prices lower. But at the same time, once you buy those like bottoming areas, the impulse the other side is for a real big move higher. But again, it probably comes later when you get all the cuts. But if cuts can be pushed out because of higher inflation, you're only going to get those cuts because you're going to see a real weakening in growth. So, and that's far out for now. The focus for the next few months, as bare minimum, is going to be on the higher inflation that's likely to come. So that's what we have to withstand for the time being first. And there's nothing really there that's going to, unless we get an end to this war today, all the oil comes back on. But again, a lot of production has been shut down. It takes several weeks for that to get, So yeah, I don't see. I'm more than happy to change if the data suggests otherwise, but at the moment, it's nowhere near.
Yeah, that makes sense. And where does that leave Solana and ETH in that case? If we follow your thesis and Bitcoin pulls back 50 to 60 cost basis levels, what do we see for Ethereum and Solana?
I think we see ETH. I think we see ETH make new lows, so below 1700 or 1760. I've got the low at 1750. Do we see sub 1,000? I don't think so. I think you want to be buying it between sort of 1,100 and 1,600. Anything there in there is pretty good for the long term, I'd say. I think Sol can come back more materially. So I think Sol could end up coming back into the 60s. But if you get it in the 60s, it's probably a good long term buy. 50s is probably even better. Do we see it, say, sub 40? I'd be very surprised if we got Sol sub 40. I think if you can get it in the 60s, it's pretty good.
Okay, and what about hype?
Hype is tricky because hype is one I haven't been. Hype has moved very strangely for a bear market in terms of like how assets move in a bear market. So I think anything in low 20s is a good buy. If it even comes back down to that, I think it will. But anything that starts with a 2 handle is probably pretty good long term. But I would have, so personally, the way I'm playing it is having a really wide range. I'd buy anything from $15 to like $28. So that's how I'm playing it. And again, I would do a DCA. So if I wanted to put in whatever it is, but let's say it's $100. If I wanted to allocate $100 to hype, the way I would view it is, okay, I'm going to try to play the timeline a little bit. So if I think the bear market bottoming process is going to be another 1 to, or probably 2 or 3 to 6 months, somewhere in that time frame, I'm going to want to buy between $15 and $28 hype, and I'll DCA in a small amount every couple of days to try to get the full $100 in between that range of $15 to $28,
Yeah.
and try to get my average price as close to 20 as possible.
Makes sense. And speaking of hype in particular, great news came out a couple of days ago. Hype's blowing up. Great positivity, sentiment all across X, etc. Yet we're down 7% on the day. We just published a market pulse, and I heard yourself and abroad discussing potentially shorting hype, because when you see super positive news and it just doesn't show strength, and we're down 7% on the day, it seems like we're due quite a sharp pullback on hype. What's your take on it?
So I'm short at 43. I got quite lucky in the field, to be honest. But I'm only looking at that from a trader's perspective in terms of, I think it's just a bit overbought. When prices are mostly going down and then you see one coin go up, it gets a lot of attention. And I think just looking at a lot of the indicators, it was quite overbought in the low 40s. So even now at 30 in the 39s, it's not overbought now. It's reset quite a bit. So I could easily just go and take my position off today, to be honest. I wouldn't be a buyer of hype at this price, even if it was to pop into like 45, 46, 47. If anything, I would just look to re-short it at that point in time. I mean, it'd be very surprising if he was to see a breakout of like 49, 40, 49, 50. It's like that sort of top resistance I have. It'd be very surprising to see that in like a bear market. So I think overall my bias is to be looking for shorts on this for now. I mean, my view could easily change next week, but anything in the low to mid 40s, I think is like a short. Just for transparency, I was in at 43 with a stop loss of 46. And I woke up this morning and it was down like 6-7%. So I got a little bit lucky with it as well. But I think that this could pull back. But this might shake me out, or I might take profits into like 38s, 39s if it starts to hold up well. Then look for a bounce back into 43 to 45 and look to play it again for, it might be the case that you see price bounce, move up into the recent highs of 43, 44. You see holders start distributing in that level again, and then you're looking for the next leg down, the actual leg down. Sometimes you get a few stabs into the highs, or on the other side into the lows, to then move up properly from there. Or in this case, I would think you might get a couple of stabs into the highs, then a more material move lower. And we might be at the point where the news flow of it has like peaked out in the short term in terms of the general positivity, which is again what Bro was saying today. So I definitely wouldn't encourage people to like follow me on shorting this. This is like a strong asset, so I definitely would encourage people to like follow me on that. But yeah, overall, I wouldn't be looking. Just generally speaking, I wouldn't be looking to be a buyer at 40. I'd be looking for the levels I gave earlier between 15 and 28. I don't think we'll see 15, but between sort of that zone and DCA over time with however much I want to allocate to that position. But yeah, I think you're right in terms of that positive news flow has like had its run, I suppose.
Yeah, absolutely. There's two kind of directions we could push this conversation, but I'll touch on both very shortly. So it's interesting. We just talked about how positive news didn't really move hype. It actually moved things down, as we said. And hype is a great project, insane innovation, thriving user base, lots of developers, so many positive catalysts surrounding it, and it's still struggling. We did an altcoin tier list type of video last week. We went over a bunch of altcoins, and I'll reiterate the main message from there. Most altcoins you see, even in the top 10 and 20, are absolute BS. They're a pile of crap. And something like AVAX, for example, at one point, something I really liked, was super bullish. Not looking good. Not looking good. Doesn't have a bright future from a fundamental perspective. So when you've got something like hype, which seems like it's going to change the crypto world, and it's still performing badly, and we're hoping for a push, like pullback, push upwards, and maybe a pullback, get in early, well, not early, but get in low, and it performs when bull mode reactivates. Some of these things like AVAX and DOT, I think those are confident shorts, Tom. I wouldn't bet against hype, but some of these I think you can place pretty big bets towards. And almost in these types of markets, I think there are lots of different altcoins you can short with almost no downside. Stuff like DOT, stuff like AVAX, etc. So that's just 2 cents from me. The other thing I was going to talk to you about is, when you're looking at narratives, we saw the quantum threat pop up a couple of months ago, and it pushed Bitcoin down quite hard. And someone like yourself, you said we need to see some sort of solution come in before the big players are ready to come back or get started in the first place. It's very interesting because as soon as the war kicked off, a lot of people stopped talking about it. And I feel that we do need a solution to quantum. It's a real issue and it's a real problem, and we do need to resolve it. But I feel a lot of the pressure and the negativity has already been priced in for it. Now maybe you need the solution to resolve and ease tensions. I think the solution will be a massively positive catalyst, but I feel it's already taken the brunt of the negativity and the FUD. So from a narrative perspective, you see a great catalyst like what happened with hype get wasted basically because of the broader market conditions. And Bitcoin probably benefited in the sense from getting battered by the quantum threat earlier than the war kicks off, because the war has almost distracted people from what's going on, in a sense. It's already taken the pain. So yeah, just something to note from a narrative perspective. When you see something like this from hype, this news get eaten up, it sucks. At the same time, positive side, the quantum FUD around Bitcoin, people, in my opinion, will forget about it. But as soon as solutions start to be presented, which they are, I think they use that as a massive catalyst forward. So those are just some comments.
I think it's still capping price, to be honest. I think just because people aren't talking about it now, I don't think. I think the big players would not allocate heavily or even remotely close to wanting. Where if this wasn't a problem, I think they would allocate, and they would allocate quite heavy. But I think with this still having overhanging us, I don't think you're going to see any sort of big sovereign players allocate, at all really, or very small amounts. I think it's still a problem. I think it's just had its time in the limelight as an excuse to go lower, as an excuse to drive price lower, and we saw that and we got that. I now think something else has overtaken that, but I still think it's a problem, and I still think it's something that's going to cap price in the future. When Bitcoin goes into the low 60s and even the 50s, at that point, quantum is priced in. You can then start buying that up with the view to okay, this is priced fairly now, or even still below fair value really. Even in the 70s, I'd say it's priced pretty fairly for the quantum threat. When we were talking about it, when Bitcoin was in the mid 80s, low 90s, that sort of area, I think that price was too high for an asset to have this this kind of threat over it. The asset is then priced too highly, considering it has that threat over it. But with price putting back to 60k, I think you're priced more fair value for it.
Yeah, that's more what I'm saying. I think a lot of it's already been priced in.
Agreed.
Maybe there's a cap now on how high it can go. I don't know whether that's 80, 90, 100. I think ultimately smart people knew that the quantum threat was on the table when we were at 127. So I'm not
rush for the door.
Yeah, exactly. So I don't know. I think you're the macro guy. You say all the time macro leads, and I can see even without a solution, Bitcoin still going back when macro conditions are hot, very, very high. And I think we spoke over that dinner we had last week. There aren't many big positive catalysts to perhaps push it into the 130s, 40s, 50s. But I think a seriously proposed solution that people get on board with could be that catalyst. It's almost like a way to blow the cap off in dramatic fashion. So yeah, I agree with you. But like you said, we've probably taken a lot of the brunt of it, and it just leaves room for more upside later on. And they will, absolutely. Look, human beings are greedy. You already have big players involved of a vested interest in it doing well, right? People like
Yeah.
BlackRock and Michael Saylor, they did not get in out of goodwill, right? They got in to make money, and they're not going to let this vehicle for making money just disintegrate. And inevitably, it's these big players who have to come together to work together if they want this opportunity to stick around. So if you believe people are greedy, you can believe that they'll come to some sort of solution eventually. And I think they will. I think they will. I think they'll be prompted to now, especially with how fast things are moving. But yeah, Tom, that's Bitcoin. That's macro. That's the war. Any interesting insights on the ETF situation?
Not much. I mean, I didn't even check that today, to be honest. I'll check it now. But again, I just think there's other drivers at the moment. But let me check it quickly now. Yeah, we did have inflows. I reported on this, I think it was beginning of the week, that the inflows have been relatively good, but we did have our outflows yesterday, which is to no surprise considering the Fed meeting, the negative reaction around it, etc. I think this is going to be choppy, to be honest, for a while. I don't think you're going to see major or mass inflows or major or mass outflows. Yeah, I don't think it's something. I think if you see prices go lower and then you start to see the inflows be like sizable inflows, then I think that's a sign. But at the moment, it's just choppy, same as how it was when price was fluctuating between 84 or sort of 83, 84K and 91K for 8 weeks or whatever it was. So I think that's where we're sort of at with it, to
Yeah.
be honest.
Is there anything interesting from mechanics perspective, liquidation heat maps, open interest, funding rates? What are traders looking to do right now?
So funding rates have been in the majority negative, which means people are betting on downside, paying a premium for shorts. And that's why I thought we could have like a more significant move up beyond sort of 74K. I think we wicked like 75, 800 in the night, like 4 nights ago, whatever it was. But we did have a period of like significantly negative funding rates. I thought that's what could have driven more of a short squeeze. But again, we're sort of seeing that come up and then peel off, come up again, peel off. So I think that's not a particular driver, at this moment in time. It's a driver on the day if you're a day trader, but it's nothing really beyond that.
Yeah, no, interesting. What about with ETH, Hype, Sol, etc.? If we look at the funding rates and open interest for these, do they just follow Bitcoin? Is an
Mostly.
anomaly here? Yeah.
Yeah, they mostly follow it. It's not. I think Sol has had consistently negative funding rates, which is why I think you get like slightly bigger moves. But I think it's been quite muted as well, to be honest. Like Sol's moves against ETH has been quite muted. So yeah, I don't know. I always say to like us, friends of mine, etc. When you're in bull markets, you always feel better being in positions. Like, how do I feel going to bed at night and sleeping? No, I'm going to be sort of, spark out for 6 hours or whatever it is. I always feel in bull markets better being in positions. But now it would scare me being in positions or like, to go to sleep holding big positions. So I think just that general feeling for me is a good tell of where I think the markets are at, etc. And I have just this overwhelming feeling of just remaining in cash still. Even though I might miss opportunities here and there, we called the move up from the late 60Ks into sort of early mid 70Ks pretty well, but still chose to not really play it just because it's just even though that's what it was pointing towards as like the likely outcome. It's just you don't have great confidence and you're betting against the trend. So, the general trend has been a downtrend. So if anything, you should be looking for shorts higher up. I mean, I would have shorted more towards 77, 78 rather than looking for anything in 75, 76. And then in the mid 70s, early 70s, I flip-flopped a few times in terms of a trade for, the next few days. But overall, my feeling is to stay in cash, take trade opportunities if they come, but for most people, I wouldn't sort of advocate for that. And yeah, just to sort of stay patient, remain cash, stay patient. Again, the dollar is up substantially, so the DXY is up from I think it was in late January, it was in the 95s. It's now 99.4. I mean, it was 100 at one point today, so I'm not sure what's happened there. Yeah, nothing really major just kicked off there. Crypto's up a tad, but yeah. So again, staying in USDT in dollars has been okay for the last 5 weeks or whatever, in terms of like your real purchasing power. So yeah, that's where we're at, or I'm at.
Yeah, that makes a lot of sense, Tom. I think we've kind of covered and said if you're an investor, pretty much hold on to some cash. You know, you can't really go wrong with DCAing or value cost averaging down. But if you are someone who wants to try and time the market to an extent, and you wouldn't be watching this video if you weren't, then wait for certain key levels. Bitcoin, you said maybe start around low 60s, 63 and below. And we could see 50 on the table. So don't panic if you're getting at 63 and we're at 57. You know, that's part of the game. I assume similar pullbacks on the table when we would want to enter the likes of Solana, Ethereum, Hype, etc. We said Hype maybe 20, 18, maybe start DCAing down after 23. Solana, Ethereum, some quick levels for your investor friends to start DCAing if they value the asset.
I would say any new lows. So I think ETH low. I mean, even the recent lows of like 1,800, anything below that, like long term is quite good. Down to say 1,100. Again, it's a really wide range, but you know, if you was buying Bitcoin at 16K, 19K, or 22K, you did pretty well. And I mean, between 16K and 22K is like a 40% range. But overall, you did really well. You know, a year and a half later than that. So I think even though these ranges are wide, it's about buying that process of the bottom rather than the bottom. So I'd be looking at ETH anything below 1,800. So I just think anything below the closed lows. So I think it's like 76s. So anything in the sort of low 70s, you can start getting involved. For instance, if we got a print of 75, I would buy a bit of Sol for the pools to try and, you know, I think if you had a you know, the staking pools, I think if you had between 50 bottom range of 50 and the top range of 100, you're getting 3% a month. So I think then buying at 70, because if you buy at 90, you have the potential downside of the price going to 60. You know, but if you're buying in at 70, you can then add another position at 64, another position at 59, and sort of build a position that way. So that's how I would be. That's how I'm thinking about it and looking at it.
Yeah, absolutely. And right now, if you're sitting on stables, of course, if you have nothing to do, no time, you don't want to put in liquidity pools, you can earn like 2% on Aave and Camino, but you're not you're not outperforming inflation, but you might as well, especially if you have size. And or they can play around with airdrop opportunities. There's lots on the table if you have a bit more time. But that's good, Tom. That's the investor's playbook. For the traders out there, what's the trader's playbook? If someone looks at you as a role model, someone wants to be like Tom, what do? What's the game plan?
Oh, I don't know. I don't know
You
about.
quite literally do know because you are doing it.
Yeah, but telling other people to do it is different. I had some oil longs. I'm Brent oil. I'm still betting for that to go up again. Not big size. I'm not trying to short their equity indexes because I just think it's a hard game. They're structurally like rigged to go higher. Even I think they'll pull back, but again, I wouldn't bet my money on downside. Mostly, I think again, I would really emphasize this. Mostly, it is just patience now. And even I noticed myself, there's a few people around me that like I discuss what I'm doing, and they've said to me, "Oh, maybe you didn't need to take that trade, or maybe that trade, you know, the oil longs. I've done brilliantly trading oil, and yet it's not my bag, so I've not bet big size on it whatsoever. So then I've done really well on some of these trades, but just not played any size. So then I taken a punt on a crypto trade that's just undone a load of my gains on the oil ones, just because my sizing has been so drastic because I'm more confident on the crypto side. Or I feel like I can bet my size on the crypto side because that's where, you know, I like belong or whatever. So in terms of other trades, if gold gets into the low 4,000s, I think you can buy it. I mean, if it gets to 4.5, you could probably long it for a bounce into 4.7, 4.8. I think rates are done. Like yields, US bond yields, like the 2-year is now, what is the 2-year? 3.85%. I think, I mean, I don't want to advocate for buying bonds, but if it was to go to 3.9%, you could bet for that to go down. Silver, I'm not bothering with. I wouldn't touch that. Just trying to think what else is really out there. This is something I was going to ask abroad today about Robinhood. Again, in terms of valuing stocks, it's not my forte really. It's not my area of expertise. I would like to buy Robinhood for the long term, I think, but it's like, what price does that come down to that is really attractive? Is it like $40, $50, $30, somewhere in there? So that, I think that's something I'd ask abroad, because I think he'll have a better answer for me. But in terms of trading everything else, I am taking trade opportunities, like hype yesterday, shorting that yesterday. Especially, it was hitting at 43 when Powell was speaking, and it was the market reaction. He came out as dovish as possible, like as dovish as he really could be, but also sort of said, you can't take too much notice of our dot plot, etc. And the market reaction was like, oh Christ, he's going to be on hold for a while. And he also then said he might stay in the seat until the investigation is cleared up, and everyone knows that the nomination is not going to be approved until the investigation is cleared up. So then it was like, oh, that's bearish for rates, or negative for rates, in terms of like rates remaining higher. So then you look at all that information, you think, well, hype is still at 43. It was overbought. And it had good news out yesterday or whatever it was, and it couldn't keep rallying higher. And it's been on a great run. From the lows, it's gone from 21 to 44. It's doubled from its local lows, I think a month or two ago, whatever it was. It's probably that opportunity is now probably done, at least in the short term. But again, maybe it retests this 43, 44, 45, 46 level. I'm then look like an idiot on my short, and then it rolls over again, because you could easily have something like this. So yeah, I just tried to play opportunities as and when I see them, and hope that I make money overall on it.
No, great job, my man. Thank you very much, Tom. Appreciate it. This was really good. Thank you, everyone, for watching. And I think we covered everything. I guess we'll dive into the next one next week. Maybe we can cover some stocks. But Mr. Joms, take us away.